It looked perfect, demand was clean, the trend was bullish. Everything aligned, so I bought. Price pushed up, then reversed hard and took me out. No warning, no time to react. I thought I was following smart money. Turns out I was getting played by one of their oldest tricks. You follow the rules, price was bullish, demand was holding, so why did it flip right after you entered? Because you were focused on the entry, but smart money was focused on the exit. They weren't reacting to demand, they were hunting this high to the left. That's where your trade ended before it even began. This is where most traders go wrong. They don't have the structure mapped out before the entry. So they buy with the trend, but they can't see where that trend is going to end. Before you can fix that, you need to learn how to map the structure the right way. Let me show you how I teach it so you can read the market properly and avoid traps like this. So the first thing to understand is to apply 3 things when it comes to this smart money structure mapping. 1, you need a level which is going to mark out what we class as your break of structure. So let's just mark this out as a BOS in the market, which stands for break of structure. And we'll place this into the center. So when we see a break of structure, what do we need to identify it? Well, we need to find a previous swing high to a swing low, a pivot low, and then we see a break to the upside. That's a bullish break of structure. When we're looking for a bearish break of structure, let me highlight this and we will copy it, drag it down to here, and we can identify a break of structure to the downside. Now, the break of structure to the downside is going to go from a pivot low to creating a pivot high, to a break and a close to the downside. Now, it's important to understand when you mark out a break of structure, it must come from a body candle close through the level. We do not use the wicks as a break of structure. This will help you in future areas when you're looking at potential trades to avoid traps in the market. Now, what do I mean by those traps? Well, when we see a high like this, and it creates, and we just change the line, a sweep in the market. This is not a break of structure for you to use this concept. This is identifying is a push through, picking up liquidity to then drop and close back down, and we see the runoff to break back to downside. Now, I will go through later in this video how we find our valid high and low when we're creating these breaks of structure. At the moment, I just want you to understand that break of structure. So again, would this be a valid break of structure? Just pop it down below in the comments right now and let me know if you said yes or no at this point. Now, if you said yes, then you're wrong. This is not a valid break of structure. It might be currently for your strategy, but using this smart money structure mapping you're going to learn in this video, it's not valid. I'll go through why in a moment. Now, what is a valid break of structure now is this low here. This is a valid break and a close to the downside for a new break of structure to the downside. So if I was to mark this out as a mapping area, I'll just quickly go through. This is a push to the upside, a pullback, a push to the upside, a reversal all the way down to here, then a pullback and a continuation. We do not use this as a pullback phase. And again, I will go through step by step exactly why we don't use this, so you're fully aware of how to read this. And when we go through to the 1 minute charts in a moment, that's coming up, so stay tuned, keep watching. That will help you to understand how we map up an actual real price chart. You can then start to see how this works. So this is where we have our valid break of structures. This is what we class as a valid sweep in the previous high in the market. Okay, but then forms a valid high, and I'm going to mark it off with a level right now so you can see this is a valid high in the market. Now, this was a valid high for one reason. Let me just mark out a high. Okay, we're going to place this to the top and to the left. Now we need a low in the market. Now, a valid low at this point is where this break of structure sits. So let me just change this to a low, and we'll put this to the bottom. And we're just going to remove this BOS at the moment so you can understand the concept. Once we are here, and just imagine you can't see this price action at the moment. This is our current valid low in the market after we have a break of structure. And I'll go through exactly why this is a valid low in a second. This is our valid high, and that creates our current trading range. Now, this sweep has happened before the valid high. Now, very often you'll see these sweeps occur, and you'll see this potentially on a live price chart after a valid high is created. And this is how smart money moves in markets. Now, the reason this is a valid low and this is a valid high, whenever we are in an uptrend, and I'm going to demonstrate this just with putting an arrow on the chart because I think it's an easy way if you understand this. Once you see a candle closing down, so here, this candle closes below the previous candle's low, or even this candle here, it closes below this previous candle's low. Now, that's the last point. We want to find the last candle before this breakout occurred where we see the close down. And this is the last candle, so we can remove this arrow. This becomes your valid low in the market. Now, we can't mark this low out until you get this close through the BOS. And what's the BOS again? Your break of structure. Now we have a valid. Now we're going to remove this dashed line. Why do we not have a valid high and we just mark it off here? Well, we use the same process as we get the valid low for a valid high. We need to see a candle closing down. If I mark this off, does this candle right here close down below this previous candle's low? No, it doesn't. It's just an inside candle. And that's where we see the sweep occurring and then we drop to downside. So once we identify this candle right here closing down below this previous candle's low, that then becomes a valid high up here. Now, if this had closed down here, let me just show you what I mean. If we saw this candle closing below this candle's low, like we see on this candle, and this was a valid high, then you can see this sweep occurring and a fall to take the low. And this you may see on a live price chart. And it's very often, this is how smart money will reverse the market, leaving you unaware what is even happening. And that's how these traps occur. Now, the same will be said when we see price breaking here to the downside. This is reversing to a bearish market. Where we use the close down for our valid low and high in a bullish market, we flip this on its head and we use the close up with a bullish candle for a valid low and high. Now, when we see this break of structure to downside, what we're looking for now is we look back for the last time we see close up. So, did this candle close above this previous candle's high? No, it didn't. We just had that sweep and a close back down. This candle did close above this candle's high. Now, what we're looking for is from where we see the breakout, we're looking for the highest point. So again, we're not going to use this as a high. We're going to use this as our valid high. Is the highest point before, we saw the break. Now, of course, you can see on this occasion where we had the valid high created with the bullish move and the bearish move is exactly the same. Now, that isn't always going to be the case, but we may see this when we go through a live chart. Now, when we see this break to downside, what are we looking for again? We're looking for the valid close up. Does this candle close above this candle's high? No. So when I asked you earlier on in this video, do you see this as a valid break of structure? And you said yes, potentially. You can see how using this strategy with the smart money structure and using the candles closing above or below the previous candle, this is how you identify whether it's a valid low for a break of structure. If the body of this candle closed above the high of this candle, then this would have been a valid break of structure. But as that didn't happen, this is not a valid low to mark. So this becomes our valid break of structure to the downside at this point. The market doesn't close up and we just continue down. Now, the first time we see a close up in this situation is going to be this low here. Now, that means when we see this, we mark this off as a valid low in the market. And we can look back and this is a valid high. That means our current trading range is from this low to this high. Just because we see this is a high doesn't mean price is always going to pull back to that high. And what's actually happened, we've just pulled back into this small area. So even though we don't mark this as a break of structure, price can still hold at these areas, or sometimes we can even see price wanting to run these highs and taking an area of liquidity above into areas of imbalance and supply above in this situation. But you can understand now exactly how you mark this out, why it's a valid high and low, where we get our break of structure in the market. Again, this is going to be your break of structure. Now, before we just move on to those 1 minute price charts when we go through, now look at this break to downside. You can understand this is a valid break. Where would you now place a valid high? Well, remembering the continuation to the downside, what are we looking for? We move back this candle here. This was already marked off as a low, a valid low when we closed above. But as we close above again here on this candle, we can move our valid high down to here. And that is how you can start to move with the price using a smart money structure. So now we've gone through the basics. I hope you understand this concept. We're now going to move over to a 1 minute price chart and go through exactly how you mark this up on a live chart. Now we're on that 1 minute time frame on the Euro USD pair. We'll go back, we'll find an area, we'll just do some replay. We'll just go back, shrink this down, just find any area, and we're just going to put on a replay from here. Now the reason we can do this is this structure will work in any market, any time frame, at any point in time. We don't need to go back through hours of price action. We can just go at any place and we can start applying this. Now the way we're going to do it is we're going to mark off, let's say, from this high and zoom into price, and we do the exact same thing as before. What we're going to look for is that break of structure. Let's mark off this as a break of structure. Let's add a BOS to the area. We're going to place this into the middle and center. So we have a break of structure. Now from this point in time, if we're saying from this high, we're seeing this is a break of structure, we're in a bearish trend. Forget about price action to the left here. What do we now look for first? We look for that valid low and high. So when we have a break to downside, we're looking for a valid high. Now to find a valid high, what do we look for? We're looking for the last candle to close above a previous candle's high. That happens right there. We close above that candle's high and we just move this line across, and then we can mark off a valid high. So this becomes a valid high in the market, and let's mark this out as a high. And we're going to mark it to the top and to the left. That's our current valid high in the market. What about a valid low? What are we looking for again? We're looking for that valid close up. And if we look closely, this does close above this previous candle's high. So from this low, the lowest point, you can mark this across as our valid low in the market. So we mark this as a low, place it to the bottom, and now we have our trading range. It's as simple as that, and that's how you'll start. So even if we go back with our replay mode, let's grab this, let's go here somewhere. This is what we now have. We've marked out where we see the break of structure. We've got our valid high created and our valid low created. What price is currently doing here is putting back inside this imbalanced candle. Now that is something completely different, and it's something that we teach inside that 90-day fix. But when you're looking at this, this is your trading range. You're looking for price to pull back into your trading range where you look for a continuation. Now until we break and close through the high or the low, there is no continuation with this market. Let's just go forward with price. Let's just make this a bit slower. So as you're reading price here, you're looking for a close through. Okay, at the moment, we've only wicked through. What do we need to see here? We need to see a valid close through this level. Now, just a wick is not giving me a break of structure. That means we're still within this trading range. Let's just go forward a candle by candle approach. Now we close through that level. So once we have that closed through, we can now create a new break of structure. And once you understand this strategy of this smart money structure, you'll see how simple this can be applied. So again, when we get the breakthrough, we look back. There's our last close up because we closed above that high. This becomes your new valid high. Now, when we apply this structure, it moves with price on the chart, which means it's very dynamic and very mechanical at the same time. So now we've pushed through. Let's continue with price, and we're looking for a valid low to be created. This candle is now closed above, and we mark it off. This candle here is closed above that high. That creates a valid low right here. So let's just bring this back across. So we've dropped, pulled back, continue to break structure. And now when we look for a pullback, we don't need to see a pullback all the way back up to this high. Okay, or sorry, this high where we see the break to downside. We're just looking for a pullback within this trading range. Again, until we see a continuation, which we get it pretty quick there. And that went so quick I didn't get a chance to stop it. We get a straight push through and a break of structure. So let's just make a new BOS. Now I'm going quite slowly here in this part of the video so you can see exactly how I'm marking this up. So that candle closes up, creates a break of structure with this candle. We look back. This is the same candle again, which would have been, and then we just back off to here so you can see exactly what happens. Once we get this breakout, that's the last candle that closes up. Your new valid high becomes here. And once we see this candle closing above as well, and this is understanding how quickly and dynamically price can move, this becomes your valid low right there. So you have a valid high and low is your trading range is this move here to downside. Once we get a close back above, then we get a shift in structure. So right there, we now have a shift to the upside. So we can now mark off a new break of structure. Do you see how quickly the market can move direction? So we went bearish to bullish. Now again, when we look back, where's the last time we see a close down now because we're in a bullish market? This candle here is the last close down below the previous candle's low. So we now continue to hold as a low in the market right there. Now we wait for a close down again to create our valid high. Let's go forward a few candles. This candle, does it close down? No, it doesn't, but this candle does. So mark it off. This candle closes below this candle's low. And that means we can mark off the highest point as your current high in the market. Now we look back, there's your current low to high. So you look for price to want to pull back to continue bullish. And that's how you read this structure. And it works across multiple time frames. So again, let's go forward. And you can see we close back up right there in the market. So on that break of structure, again, there's our last candle closes below. And we move this up to this low. So now we have a new break of structure we can mark off. So let's just duplicate this line. This becomes your new BOS in the market. And when we look back again, there's our current low. We just need that what? Close down again for a new current high. So let's see, do we close down anywhere here? Oh, now we've closed down. So we can mark this off as a close to downside. Now my highest point is here. So we mark off the highest point. That's my current trading range. And again, we look for continuation bullish here or a shift back bearish. And we have some imbalance in the area of demand. Let's continue with this movement. And price comes very close to this low. We haven't even wicked through this low. So it's held at this area. Potentially we could see a wick through or we could see it close back through. And price, we just stopped it in time. This is what I class as a wick through only. So my current trading range stays intact. we've only pushed down and closed back up. That shows a wick through, and potentially this could now push price back for this high. Let's just see if we do or we push lower again. So the market in fact did push lower once more and we closed through. So now we have a valid break to downside there. See, never assume where price can go. Follow with this structure. So that's a valid break of structure. As soon as we see this break to downside, we can now look for a valid close up. Let's look at this one. This one does close up. So now we can mark this off. That's our last close to the upside. Now remember, now we're in a bearish market again. We go from those close down to the close up to find the valid high. So now we can just make this smaller, drag it across. And this is how simple it is. Now, if you're finding this strategy of marking up your charts with a structure like this a lot easier than you're doing it right now, then please drop it below in the comments and let everybody know that this is much more simplified for you with your breaker structures, your current highs and lows to find that true trading range. So again, when we saw price here, okay, this is a break, this is a close back up, this becomes your valid low. So our trading range has gone from quite a larger trading range to a small trading range. We're looking for continuation bearish, but price can go any direction. And you can see that we hold and we reverse back bullish once again. Now, when you start applying all this to multiple time frames and other things like supply and demand, this is where it all comes together. And again, when we see this break up, now we're back bullish again, looking for the last close down. That's your last close down. Your valid low becomes here, and we continue to look for the next close down, which is right here on this candle. Again, the easiest way to do this, if you do struggle with this, is just place that arrow, okay, above those areas or below those areas. So that's our new current trading range. We continue forward, go a bit faster now, and we shift back bearish. And this is the thing you're going to find with a 1 minute time frame. Price will shift bullish and bearish very often. And that's why many people get chopped out on these markets, because they don't realize where you are on a larger, higher time frame. Now again, we're back bearish again, looking for a close up. So if we mark off, there's our last close up. That means our high remains where it is. For valid low, we're looking for a close up. This closes up. Even this one may have as well. This becomes my valid low. And currently this is all valid high. So if price holds, we go back to the low. If we shift back bullish again, we shift back to the upside. But we actually held and went back bearish. Continuation this time. So now we can mark out a new bracket structure. So hopefully you're starting to see how simple this is. So you understand it. We have a break to downside, bearish again. What we're looking for, the close up. There's your last close to the upside. This becomes your valid high. We're looking for the close up to create a valid low. Okay, we could continue low from here. We don't have any low to mark, so we continue lower. We don't get that valid close up until this candle here. That means we don't mark this off. Remember, we went through in that previous part of this video where I drawn you some candles up, and there was an area where I said we wouldn't have a breaker structure. That's exactly this scenario here. We don't mark this off as a breaker structure because we never get a close up until this blue candle here. Before we wrap up, if you're tired of second guessing trades or stuck wondering why structure still isn't working, this is your turning point. There's a proven path where smart money structure becomes second nature and consistent profits stop feeling random. That's what Danny found after nearly $300,000 in losses. He didn't just learn structure, he mastered it and rebuilt his confidence from the ground up. If you're ready for that kind of shift, your next step is simple. Click the link in the description and apply for early access to the 90-day profit trading system today. And don't worry about the different colors of the candles where I've got the red and the blue candles. That's something completely different. So please don't worry about that. Just understand the blue is bullish. Okay, the red is bearish with the black is bearish and these gray candles are bullish. Just the way I have my charts. So now we have a valid trading range again. Let's go forward again once more so you can see how this works. If we shift up, okay, we continue down either way. Continue going. Price is moving strong to sideways. Now we have a big sideways range. So until we shift out one direction, We do nothing here, we're waiting. Now potentially the market went up, held at this era of supply, went back down. We haven't actually run this week low. We could still see a push lower from here. That's the ideal direction, but we can shift bullish as well. And we do shift bullish. So we just now mark it off. I'll mark off this high. And you'll see how this moves. Okay, so now we have a new break of structure. Look how big this trading range was. Now we're bullish again. What are we looking for? We're looking for that close down. Well, there's your last candle that closes down. And that means we have a new, and if I can grab it, new area we can mark off at this low. And that's it. And then we have another close down right here. And that means this is where your high becomes as well. So you can mark off your high right there. And that is how you continue to work with finding your current trading range, okay, with marking up this smart money structure. Now, we just go back. We haven't moved that much price when we've been doing this. From this area we went through, you can see exactly where we marked everything up and went with price. And how we went from that larger trading range to that smaller trading range. Just quickly see if we do go up or we go down. We continue up here, but then straight away reverse back bearish. So understanding to read this structure across multiple time frames is going to help you with what you went through, understanding these traps of buying into areas where you're getting reversed straight away and taking losing positions. Now, all that comes much more clearer in the next video coming up, where it goes through that trap of understanding where those highs sit and you're buying into liquidity. So watch that right now. If it's not out, it'll be out in the next few days.